I'd say it's a pleasure to have Greg Schuler here from the University of Pittsburgh at CIO. But if Greg, you could just introduce yourself. Um, we do have some alumni connectivities, maybe some of your alumni aspects, uh, and then how you connected with us, which I know how I could share that.
Got it. Hello, I'm Greg Schuler. I'm the Chief Investment Officer at the University of Pittsburgh. My alum connections are with the University of British Columbia. I did both my degrees at that institution. So go Thunderbirds.
Nice.
Hopefully Thunderbirds reach out to me. In terms of how I connected with 361, I do have a background in family offices. I was the CIO at the Colbert Family Office for 7 years. Started off as a director of investments and eventually became the CIO. So I do have roots in the family office space, and through that connection met Mark and 361. So it's been roughly a year, but it's been great so far. So thankful for that connection.
That has been, and we as well. So looking back on this year, it's been a ride of sorts. So what was your worst or best or both decisions as you look back?
Yeah, I would say actually the best and the worst are one and the same for us. I would say we did a good job of taking some risk on near the bottom. We did buy some high yield. We were probably a little late. We probably bought it when it was 850 over. We weren't brave enough to do it at 1100 over. We added some CLO double B pieces at the bottom. We added some aircraft debt in the double ETC space, but all those are all things that we did. Unfortunately, we didn't do enough of it. We should have done 5 times as much as we did. And that was probably, in retrospect, there were a lot of things that we had pre-mapped beforehand that we were going to do at the bottom. For example, buying junior gold stocks, for example. And we were taken by surprise, as I'm sure we all were, by the Fed action. And we were trying to be patient, and we, to a certain extent, got steamrolled by what happened, and we didn't step in. But we did do some stuff, but not enough.
Got it. But then looking ahead, different terrain, how do you see 2021, and particularly if you might point out along the way either an industry or a country or an asset class you think is something you want to back the bus up on or avoid?
Yeah, I would say we're very optimistic about what I would call the reflationary stocks coming out of COVID. And so we are hopeful that this rotation from growth to value continues. It is exhausting in the growth and venture space, seeing this continued inflation in prices that aren't based in solid fundamentals. And I mean, you look at these IPO valuations and they're starting to happen at ridiculous levels. So the area that we're probably the most optimistic about is the reflationary areas of the US stock market, such as leisure. I mean, we like the wind stock a lot. We think there's a lot of upside in that stock in particular. Another one would be Carnival. We think there's real upside there. Another one's Boeing. We think a lot of upside there. So we do think in a lot of value stocks, there's a lot of momentum. We're also big fans of European equity at this point. So we're starting to add more European long short equity funds. And we are also optimistic about real estate. We think there's going to be continued problems to unfold there. And so we're focused a lot on things such as hotels in strong gateway areas that could be opportunistic purchases for us.
Interesting. So a little outside the investing aspect, we try to help each other in terms of philanthropies or social development goals. Where's an area that you're focused on, and maybe you could be somewhat specific?
Sure. So given we're a university endowment, by definition, we're somewhat of a philanthropy as a core mission. And so we spend roughly $1 billion of research every year at Pitt in hard science and medical research. And so what we do obviously supports that mission. But what we are starting to weave more into our mission in your SDG definition would be industry, innovation, and infrastructure. And we think a very important long-term theme is electrification. And that electrification theme stretches into mining. It stretches into infrastructure. And so we're very focused in terms of finding long-term investments in things like the power grid. We've couple co-investments in the last 6 months that benefit from the expansion and actually maintenance capital around the power grid. Another one would be around the automotive sector and the transition to electrical vehicles. So auto OEMs that are very focused on lightweighting and creation of battery chassis for electrification. So we're very focused on how do we weave that theme and still generate great returns in our core book.
So the last part is we ask what your asks are, like, multidimensional. But how can our network? You're somewhat new to it. How can we be helpful to you?
Yeah, I think it's, I encourage anyone to reach out to me. I mean, I've already met some great people through 361 as we've worked our way through a couple co-investments and met people through the 361 network who are also working on the same transaction.
That's right.
Industry innovation and infrastructure themes important for us, but we're also big players in every asset class. So I'd encourage anyone who hears this, just reach out anytime and let's start a dialogue and share ideas. So that's probably the big ask.
Excellent. And then one word for 2021.
Hope.
Hope is I must say the leading word.
Is it?
It is. So
darn it, why can't I be more contrarian, Mark?
No, you're good.